If you've been turned down for a small business loan, the problem may not be your business. It may be your paperwork. Did you know SBA 7 loans go up to $5 million? And that most rejections come down to a weak business plan, not a weak business? In 2026, founders are using free AI tools to write loan applications, draft grant proposals, and build pitch decks in hours instead of weeks. And no, AI is not handing anyone money. It's helping them write paperwork that actually gets approved. Today we're going to walk through exactly how, where the real opportunities are, and the mistakes that still get applications denied. First, let's get one thing straight. There's no AI company giving out business funding. There's no Claude grant program. There's no ChatGPT loan. Anyone telling you otherwise is selling you something. What's actually happening in 2026 is that AI tools have gotten so good at writing financial documents that the work that used to take a consultant a month and cost $5,000 can now happen in an afternoon for free. That's the real shift, and it's helping a lot of small businesses get approved. Let's start with where the actual money is. There are 4 main funding paths for small businesses in 2026: SBA loans, federal and state grants, bank loans, and private investors. Each one has its own paperwork, and each one has its own AI use case. Path 1. SBA loans. The Small Business Administration backs 3 main loan programs. The 7A program goes up to $5 million and is the most common. The 504 program also goes up to $5.5 million, but is specifically for real estate and equipment. And the microloan program goes up to $50,000 and is the easiest to qualify for. The average microloan in 2026 is about $13,000. Here's where AI genuinely helps. SBA applications require a detailed business plan, 3 to 5 years of financial projections, a use of funds breakdown, and a personal background statement. That's the part most founders dread. And it's the part AI tools handle well. You feed in your basic business numbers, revenue, expenses, customer count, growth rate. The AI drafts a structured business plan with the sections lenders expect to see: executive summary, market analysis, competitive positioning, financial projections. You read it, edit the parts that don't match your business, and you're done in a few hours. That used to take a consultant a month. SBA interest rates in 2026 sit around 9.75 to 14.75%, depending on loan size and term. So getting approved for a smaller, lower-cost loan can save you tens of thousands of dollars over the life of the loan. Path 2. Federal and state grants. This is where most founders leave money on the table, because grants are not loans. They don't have to be paid back, but they require detailed applications that are scored on specific criteria. The federal government runs grants.gov, where you can search thousands of active grant opportunities. State and local economic development agencies run hundreds more. Industries from agriculture to clean energy, to women-owned businesses, to veteran-owned businesses, all have dedicated grant programs in 2026. And here's where AI is changing the game. Grant applications are scored on alignment. The reviewer is looking for specific keywords, specific outcomes, specific impact metrics. AI tools can read the actual grant guidelines, identify the criteria the reviewers will score against, and help you write your application using the language that maps to those criteria. This isn't gaming the system. It's just doing what professional grant writers have done for decades. Except now it's free, and it's available at midnight when you have time to work on it. If this is the kind of straight-talk business help you actually want, please hit like and drop a comment below. I read every comment and reply to your questions personally. Share this with family and friends who need to see this. And don't forget to subscribe, because we put out several new videos every week. Drop a comment if you've ever applied for an SBA loan or a grant. Tell us how it went. Real stories help everyone watching. Path 3. Bank and credit union loans. This is the one most people start with, and it's also the one with the highest rejection rate. Banks want to see strong financials, a clear repayment plan, and collateral. If any one of those is weak, the application gets denied. Here's where AI can save your application. Use AI to stress test your financial projections before you submit. Feed in your numbers and ask, what would a skeptical loan officer flag in this projection? The AI will identify weak assumptions, missing information, and unrealistic growth rates. Fix those issues before submitting, and your approval odds go up significantly. Path 4. Private investors and pitch decks. If you're seeking investor capital, the pitch deck is everything. Investors review hundreds of decks a month. Yours has about 3 minutes to make an impression. 3 minutes, that's it. AI is changing pitch decks in 3 big ways in 2026. First, it can analyze decks from successful funded companies in your industry and tell you what made them work. Second, it can rewrite your slides to follow the structure investors expect. Problem, solution, market, traction, business model, team, ask. Third, it can stress test your pitch by playing the role of a skeptical investor and asking the tough questions before you walk into the actual meeting. Now here's the part most people get wrong. AI is a force multiplier, not a magic wand. It can make a good business plan great. It can't make a bad business idea good. If your business doesn't have a clear customer, a real market, or honest unit economics, no amount of AI polish will save the application. So what should you actually do this week? 3 concrete steps. Step 1. Pick your funding target. Don't try every path at once. If you need under $50,000, look at SBA microloans first. If you need working capital up to a few $100,000, look at SBA 7A small loans. If you need real estate or equipment financing, SBA 504. If you're a startup with a unique product, look at grant databases. Match the funding type to your real need. Step 2. Use AI to draft, not to finish. Get your first draft of the business plan or grant application from an AI tool. Then read it line by line and revise it to match your actual business. Lenders and grant reviewers can spot generic AI writing fast. Your edits are what make it real and compelling. Step 3. Have a human read it before submitting. This is non-negotiable. A small business advisor at your local small business development center will review your application for free. The SBA funds these centers across the country. Find the closest one at sba.gov. They've seen thousands of applications and can spot the issues a reviewer will catch in 5 minutes. And one more critical warning. Never enter your full social security number, business EIN, or banking information into an AI chat. The AI doesn't need that to help you write a plan or fill out a draft. Keep sensitive identifiers out of every AI conversation. All right, let's bring it all together. So here's the takeaway. AI is not handing out business funding. It's helping founders write applications that actually get approved. The 4 paths are SBA, loans, grants, bank loans, and private investors. Each one has paperwork that AI handles well. Use AI to draft, not to finish. Edit everything, have a human review before you submit, and never share sensitive personal data with any AI tool. Bottom line, biggest shift in business funding in 20 years. Done right. This is the biggest productivity shift small business funding has seen in 20 years. Done wrong, it's the same applications, just faster. If this video helped you, please give it a like and drop a comment below. I read every single comment and reply personally to your questions. Send this to family and friends who need to see this. And make sure you subscribe, because we put out several new videos every week, and the next video you should watch is our breakdown of the biggest mistakes small business owners make on their SBA applications, the ones that cause instant rejection. Links on your screen. See you there.